Hi guys! Welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about what is Celsius? Why is it crashing the crypto market? So make sure to watch the full video. It's been a difficult year for cryptocurrency investors, made more challenging by a slew of insolvencies among crypto lenders. Celsius Network, CEL, announced on July 13 that it filed for Chapter 11 bankruptcy after a month of turmoil. The embattled crypto lender made headlines last month after freezing customer accounts, citing extreme market conditions in a prepared statement regarding its bankruptcy. The company said it decided last month to pause withdrawals, swaps, and transfers on its platform to stabilize its business and protect its customers. Without a pause, the acceleration of withdrawals would have allowed certain customers, those who were first to act, to be paid in full while leaving others behind to wait for Celsius to harvest value from liquid or longer-term asset deployment activities before they receive a recovery. Court filings show that Celsius is around $1.2 billion in the red, with $5.5 billion in liabilities and $4.3 billion. It also looks like customers may bear the brunt of Celsius' collapse, as the filings show that most of the liabilities, $4.7 billion, represent customer holdings. Celsius bankruptcy, it's just one among several high-profile crypto insolvencies. Voyager, another consumer-facing crypto lender, filed for bankruptcy protection last week after it suffered losses from its exposure from lending to crypto hedge fund 3 Arrows Capital, 3AC. 3AC defaulted on its loans, turning things south for Voyager and BlockFi. 6 states have launched investigations into Celsius, with Vermont being the latest to sue. What is Celsius? Celsius was intended to operate somewhat like a traditional bank, albeit for crypto rather than fiat currency. It was once considered among the most successful parts of the decentralized finance, DeFi movement. A mere 2 months ago, Celsius claimed that it had 1.7 million users and assets under management. Of $11.7 billion, the company said that it has made more than $8 billion in loans, and until recently had offered extremely high annual percentage yields (APYs), with up to 17% on cryptocurrency deposits. But on June 12, it all came crashing down. Celsius posted a memo informing users that it had frozen their assets, sending the price of Bitcoin and other cryptos down along with it. The post read, "Due to extreme market conditions, today, we are announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts." Read the statement. "We are taking this necessary action for the benefit of our entire community to stabilize liquidity and operations while we take steps to preserve and protect assets." In the company's July 13 statement, Celsius said it had a paltry $167 million in cash on hand to support certain operations during its restructuring process. This also isn't the first controversy for the crypto lender. Earlier this year, the platform stopped offering interest-bearing accounts to non-accredited investors following pressures from regulators. Last year, the states of Alabama, New Jersey, and Texas filed orders against Celsius for allegedly selling unregistered securities to its users. Introducing Celsius X Intro. Welcome to Celsius X, the DeFi arm of Celsius. Since inception, Celsius Network has been a lending platform with roots in the CeFi, centralized finance, ecosystem. Users can transfer crypto assets, BTC, etc., to Celsius and earn yield on those assets. Users can also transfer in crypto assets and take stablecoin loans against those assets, just like a centralized maker DAO or OV. As the DeFi landscape has blossomed, accelerated by DeFi Summer 2020, Celsius has embraced that DeFi and CeFi can form a positive-sum outcome with many synergies. DeFi offers programmatically driven, verifiable yield sources that CeFi can enjoy, while CeFi is the gateway to institutional capital that can help DeFi grow exponentially. Celsius, via its DeFi arm Celsius X, will help create a future where CeFi and DeFi will coexist. This future will start with building infrastructure where users can wrap and bridge assets across any chain. Launch. At launch, Celsius X will facilitate the wrapping of 3 assets: wrapped Cardano, ADA, wrapped Dogecoin, Doge, and wrapped Ether, F. By wrapping these assets into an ERC-20 standard, Celsius X will be able to facilitate bridging these assets for use on EVM-compatible blockchains. The first chain that Celsius X will bridge to will be Polygon. By creating infrastructure to wrap and bridge ADA, Doge, and ETH from the Celsius ecosystem onto Polygon, Celsius will expand its scope from traditional CeFi lending to include the DeFi opportunity set. Users will be able to use Celsius as a passive yield-generating platform as they did before, while also being able to use Celsius X as a bridge to bring their assets into the Polygon ecosystem. Why Celsius X Wrapped Tokens? The Celsius X Wrapped token infrastructure enables the creation of tokens on a target chain that are collateralized on the native blockchain. While this infrastructure does exist through other providers, for example Wrapped.com, centralized exchanges, the Celsius X implementation differs from other wrapped collateralized tokens in one key way. Our key actions such as minting are functionally controlled by utilizing an Oracle service, eliminating the need for trusting a centralized third party. Next steps. Once the initial launch is complete, a world of possibilities opens up. Celsius X will rapidly expand in two directions. Wrapping many tokens, ADA, Doge, and ETH are the tip of the iceberg. In promoting a world of full interoperability, Celsius X will enable wrapping of many other tokens to make them compatible on all different blockchains. These could include SOL, AVAX, DOT, Matic, and more. These tokens will all be available on the Polygon ecosystem, thus creating use cases for many non-EVM compatible assets in an EVM ecosystem. Bridging to other chains. Polygon is a thriving ecosystem with rapid growth and a bright future. However, as part of a multi-chain, positive-sum world, users will want access to opportunities across blockchains and Layer 2 solutions, which could include Avalanche, Arbitrum, Optimism, Terra, Cosmos, and Polkadot, among others. By wrapping many tokens and building bridges to many blockchains, Celsius X can help achieve the vision of connecting users to opportunities across blockchains and assets. Long-term vision. Celsius X embraces the ethos of the crypto and Web3 movement. True decentralization, where users have self-sovereignty of their own assets and unobstructed access to financial opportunity. In the near term, the Celsius X bridge and wrapping infrastructure will include elements of centralization. However, after launch and implementation of its next steps, Celsius X will progressively adopt decentralized wrapping, minting, and bridging in order to truly connect the CeFi and DeFi worlds in an elegant, crypto-native manner. Stay tuned for many pieces of content to come, including technical specifications, partnerships, methodology, and more. And come join us on our journey into the multi-chain world. Why Celsius matters for crypto. Cryptocurrency prices have been pressured throughout 2022 as markets retreated in the face of persistently high inflation and aggressive Federal Reserve interest rate hikes. There has been persistent selling pressure in the crypto market and for other risk assets. Negative sentiment surrounding crypto was compounded in May when Luna, associated with the stablecoin Terra USD, completely collapsed after USD lost its $1 peg. The collapse of Luna and Terra USD wiped out $60 billion in investor value. More ominously, it undermined confidence in the entire cryptocurrency market, which already had a reputation for extreme volatility and rampant speculation. Some crypto experts also accused Celsius Network of contributing to the collapse of Luna, but Celsius has denied those claims. Crypto market freefall. Cryptocurrency investors may be concerned about potential contagion spreading to other crypto platforms, similar to the type of mass withdrawals that can occur during bank runs. Omid Malkin, an adjunct professor at the Columbia Business School who teaches classes on cryptocurrency and blockchain, said the uncertainty surrounding the Celsius situation contributes to bearish crypto market sentiment. Experts say fear and uncertainty, the liquidity crunch, and U.S. inflation data are hitting crypto markets hard. On July 13, the Labor Department reported a 9.1% rise in the Consumer Price Index, CPI, for June, the most accelerated pace of inflation since November 1981. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.